Hello, everybody. Thanks for watching this video. I want to spend about 20 minutes and hopefully show you some really cool things about what modern business analytics can lead to. So one thing to keep in mind as we start is the power of analytics is not just to see an interesting looking visual on your screen. What we really want to be able to do is lead you to be able to confidently take data-driven actions in order to improve your business performance. So I'm going to try to show you some examples of that using real brewery data. It's slightly sanitized in order to not give away any proprietary information. And what we're going to do is use it to understand the business at kind of a high level, and then really dive into the data to be able to see what some actionable insights are. One disclaimer as I start is we don't use computers to drive 100% of our business, right? There's still an immense amount of value in human actions and intuition. So not everything that I show would be 100% achievable by the business. But what we want to do is have the analytics very efficiently be able to point out certain things that could be opportunities that then the humans with their knowledge can take advantage of because they have good data to back it up. So what we're going to do is use the analytics to really confirm any suspicions or hunches you might have, so you'll be able to confidently take those actions. And as I dive into the data, I want to leave you with this one question. So would you be able to spend 20 minutes in your data, in your analytics today, and be able to find the type of opportunities that we're about to show on the screen? And with that, here we go. Okay, on this first insight, we're going to start on our beer summary. See if we can find anything interesting. I'm going to focus in on our pale beer style here. And one thing I'll draw your eye to is that in our breakdown between wholesale sales and taproom sales, this one is heavily weighted towards wholesale compared to taproom. And as you look at the rest of this column, that's much different than all of our other beers. Nobody is even weighted 50% toward wholesale except for pale. One other thing that kind of stands out is our total barrels are 150 barrels during this period. That's almost 50% more than our next highest beer and double a lot of our other ones. However, this one only ranked second in terms of total sales dollars. And it was just barely above the next one in our ranking in terms of total sales dollars, even though we sell almost twice as much pale ale as we do West Coast IPAs. So something stands out there. Let's see if we can track it down some more. Where I'm going to go to next is our flagship summary because pale is one of our flagship beers. And we're going to look at this chart in the middle, and we're going to focus on pale A, which is these columns. And what that's doing is it's looking at total barrels, sales, and margin. You'll notice this one has a very large dark blue bar, and what that's showing is this is wholesale kegs. So you'll notice a really large bar up here in total barrels, but when we look down at margin, we see a much smaller bar. So what that means is we're selling a lot of it, but we're not making all that much money off of it. Let's look at a little bit more granular detail. So I'm going to go to tap room and keg. So this would be draft beer out of the tap room, and I'm finding pale A. First, when we look at total barrels, we see we've only sold 2 total barrels of draft out of the tap room. And that's wildly different than all of our other flagship beers where we've sold almost 20 barrels of beer during this period. So that's pretty concerning. We're going to bounce to another visual and see if we can find out what's going on there. I'm going to look at our taproom volume comparison next, and this is lining up all of our different beers that sold in the taproom. So we have pale A down here. As we scroll across to the right and see how that's been selling over our different periods over the last 6 months, as we can see really for between the beginning of October through the beginning of January, we didn't sell any in our taproom. And then even since then, we've had some gaps in time where we had it on draft for a little while, then we were out of it, and then we had it on draft again. So with that knowledge, let's bounce back to our flagship comparison. So what's going on here is we're brewing a fair amount or a large amount of pale A, but we're selling it all to our wholesale keg distribution line. So what that's causing it to happen is we just haven't had any available capacity to have it on draft at our tap room. So what we're going to do and take action based on these insights is we're going to try to save 20 barrels for our tap room draft, so we get the same amount of volume that we're seeing from our other flagships. And what that's going to do in terms of profitability is pretty amazing. We're going to go from making about $300 per barrel that we sell of margin going to wholesale kegs, and we're going to change that to $1,500 per barrel. So there's a $1,200 per barrel profitability difference right there. If we multiply that across 20 barrels, that's about $24,000 of profit we would be able to make off of this decision. An additional thing we'd be able to do is using the power of Tableau is we'd be able to set some alerts. So anytime we got up close to the total amount that we are going to allow to go out as wholesale, we'd be able to start sending out emails. So our sales guys and our distribution team would be able to say, okay, we've sent enough out as wholesale. We need to save everything else for the tap room. And that'll allow us to make sure we always have this beer on draft and be able to make that extra money. Okay, next up on our list, we're going to look at another beer deep dive and see what we can find. And again, sorry, this is moving kind of fast, but trying to get a lot in just a few minutes here. So let's go back to our beer summary and let's see if we can find anything interesting with margin. So if we scroll through our margin column, we see all of the margins on our different beer styles. What stands out is double IPA at 73% margin. That's really low. Hazy IPAs are also relatively low, but in general, we should expect to get higher 70s into the 80s for our margin. So double IPA definitely stands out as an outlier. Let's see if we can find what's going on there. So I'm going to back out of here and get into our beer deep dive. And we're going to filter on double IPAs. And in this case, it already was filtered. And then we're going to focus for this demonstration up in this upper right. And what that is a sales and cost relationship for each of our beers. And we're looking at double IPA in blue here compared to all of our other beers in gray. And we're looking at each different way we can sell this beer. So first we have taproom kegs up here. Then we have wholesale kegs down here. We have wholesale cans is this combination, and then taproom cans. So first, let's start up here at taproom kegs. So we're seeing for double IPAs, we get a 92% margin, which is the same as all of our other beers. So that's good. That looks like we don't need to worry about what's going out of the taproom as draft. We're getting a good margin there. So next, let's look at cans going out of the taproom. So that's this next group of bubbles. And what we're seeing is double IPA has 73% margin, and that's relating to 76% on all of our other beers. So we're leaking a little bit of margin right there, but 3 points probably isn't our biggest concern. Let's look more at wholesale and see if we can find something there. And we definitely do. So for wholesale cans, all of our other beers get a 68% margin. Double IPA is 61, so we're dropping 7 points. So that's something we should look at some more. How about kegs? And kegs tell a similar story. We're going from 73% to 66. So we're dropping another 7 points of margin there. Okay, let's look at the largest customers that are buying double IPA in the wholesale market and think through what some price increase strategies can be. These are all of our top 10 customers. We can see what they're buying in terms of kegs and cans. One thing that stands out as we scan through these is we have a lot of Whole Foods customers that stand out in here, and they're all buying cans. So cans have our lowest margins, so maybe Whole Foods is a place we want to go attack and push a price increase through. We may also know that Whole Foods is very competitive. The pricing is very competitive with them. So we may also find that, well, even though Whole Foods is a good opportunity, we don't want to lose any volume by pushing through this price increase. So we might change our focus and let's go after some locals, smaller restaurants and bars. So we can see we have 4 different restaurants and bars that sell cans, that maybe we would be more successful pushing through a price increase there. So let's just say we were able to do that and the volume stayed where it was. If we were able to get those 7 additional points on wholesale cans, based on the margin increase, that would be about $2,000 total additional profit. So pretty easy there. We had 2 clicks through our different dashboards. We found something real specific to go target. And if we were able to push that through, that's $2,000 of additional profit just right there on a relatively low volume of beer for us, double IPA wholesale cans. So now we've looked at 2 different beer demonstrations, and we've seen some good savings there with a minimal amount of effort trying to search through our analytics. Let's see if we can find anything on the customer side. Let me take one more sip of my rocket fuel here so we keep moving fast. Okay, customer summary. So we're going to start on our overall performance dashboard. So as this is coming up, you'll notice that right now it's showing this period is down 18% over last year. So that's a bit of a concern. If we were going to look at our individual customers, let's focus on something good to start. It's always good to start with some good news. So let's look at resorts. They're up almost 30% year over year. I'm going to zoom in on them a little bit. A few things we'll notice from this initial dashboard is that we're up, like I said, about 30%. And when we're looking at this period compared to last year, you see last year they take a very steep drop as we get into March. This year it's maybe starting to drop a little bit, but overall it's been still pretty strong. So far resorts are looking good. Let's see if we can find some more information on what's going good in resorts. I'm going to go to our customer summary next. And let's see if we can find some resorts. Okay, cool. Number 1 customer is a resort, Resort A. However, they're down 28%. So, okay, I guess all resorts aren't doing well. Next up is another resort. So they're, in this case, this is interesting. So this is showing we can't do a year over year comparison because we didn't sell to them last year. So you can tell from this trend graph, this is a very new customer for us. We've only sold to them about 4 months in a row. And they're our 2nd highest selling sales customer. So that's something that we should probably look into and make sure we understand this new customer that's doing really well. Maybe we can support them better just to see their sales growth really take off. And then finally, since we're on the screen, here's Resort B down here on number 4. And you'll see they're actually down a little bit too. So what we've found from here is resorts are making up a very large % of our wholesale sales. And Resort C, being a brand new customer for us, is really driving the majority of that volume so far. So let's go dive into Resort C a little bit more and see what else we can learn about them. I'm going to now click on our customer deep dive. And we're going to go ahead as this comes up and filter on Resort C. Okay, here they come. So some of this dashboard we won't use right now, but some of these indicators are just, again, confirming that they are a brand new customer to us. We've really only been selling to them the last 4 months, and they've only shown up on our radar as an important customer in this most recent quarter. So first, since we looked at it on another one, let's just see what their margins are doing. In this case, they're buying cans at a 69% margin. That compares to all other customers at 67%. So that's good. We're making a little bit more money off of these guys every time we sell them a can of beer. So let's try to sell them more cans of beer. And then on kegs, they're basically making the same margin. Okay, we find they're buying 3 different beers, mostly pale, some hazy, and then some of our fruit beer. And the first one, pale, they buy some kegs and some cans. The other 2, they're buying just cans. So as we're thinking through how we can help support this customer, is one thing is, well, they must be doing a good job selling draft beer of our pale. Maybe they would want to try a few other draft beers of ours to supplement some of the cans that they've been selling. Another thing we'll look to do is compare what this resort is buying compared to all other resorts. So let me just do that quick filter over here. And we'll show Resort C is going to be in blue. All other resorts are in gray. So they're buying a good chunk of the pail. They're really buying all the hazy and fruit beer that we're selling to all the resorts. But one major beer they aren't buying, and it's actually our number 2 seller to the whole resort channel, is West Coast IPA A, which is one of our flagships. So this looks like a great opportunity. Our sales guy can go into Resort C. He can say, man, you've been a really good customer for us the last 4 months. Things are going really strong so far. Really happy with it. We have this beer that other resorts in your area have been selling, and they've been doing really well with it. It might be something that you want to buy more cans or kegs of, and we think you'll do really well with it also. So this is a way that we can take some of our specific data tied to their market and try to help them find where they will have good customer demand, and then help push some of our beers in order to satisfy that demand. And ideally, their sales grow and our sales grow to them. So it's really a win-win. Let's just say in this case, we weren't able to get them to buy like half of the West Coast IPA that we sell to the other resorts. If we were able to do that, that would be about $8,000 more of sales. And then with their profit margin on selling kegs to resorts, that would be about $5,000 more profit. So we were able to really target a customer, target a specific beer, go try to sell it. And if we're able to, that's a pretty quick $5,000 of profit for us using these analytics to help drive some of those actions. Okay, so we're on to number 4 here, and this will be our last quick demo on analytics. So let's do another customer one. I think always a good place to start is our performance dashboard. So let's go there. First thing we're going to do now is let's find, so last time we looked at a good guy, so resorts are green. Let's find a bad guy. So in this case, let's go ahead and grab our restaurants. So restaurants are down 23% in this period. We'll notice a few things. Let's maybe grab a beer that doesn't look good. Well, hazy IPAs are the number 1 selling beer to our restaurants. And they're down 25%. So that seems like a pretty good place to start, although there are a lot of other beers that have been down as well. But let's keep our eye on hazy IPAs in restaurants and see if we can find what might be driving that. So to try to pin down a little bit more which specific restaurant we can look at, let's maybe go to our customer portfolio next. This is going to show some statistics across all of our different customers. And what we're going to do right now is see which one might be driving the majority of the drop in restaurants. All of our customers are segmented in this large local grouping. So we're going to scroll through here, and well, I'll just give you a feel for what it looks like. But these are all little different customers listed. This first one we clicked on are actually the largest of the restaurants, and they're down 20% in this period. So that definitely looks like might as well start with the biggest one first, right? So I'm going to click on them. And this is restaurant A, so other stuff filtered to them. So let's see what we can find out here. This is kind of interesting. This is looking at their trend chart. So sometimes they're up and down, but recently, really since kind of the fall started, they've been relatively flat in this range, which for them is pretty low. Last winter at this time, they were up more in the like $1,000 a week of sales. In the summertime, they were up about $1,200 per week, and now they're down at about $800, and they've been down as low as $600 recently. So yeah, it does look like this customer we could definitely look at a little bit more. This is a concerning trend, I would say. Let's look at what beers they buy. So the largest beer is hazy IPA A, and that's down 30%. So that hazy IPA A is driving the majority of their drop. Okay, so with some of that knowledge of we want to look at restaurant A, let's go to our customer deep dive. And this one's filtered on customer A already. So a few things stand out here. Like we kind of saw from that trend chart, this guy over time has been one of our very important customers, ranking number 1 and number 2 in total sales. But this quarter, they're all the way down to number 5. So that's a concern. This monthly trend is similar to what we saw before. Really, over the last 6 months, they've been much lower than they have in previous periods. So just confirming that, yeah, looks like this customer, we should see what's going on and see if we can fix them. What I'm going to do now is let's focus on what they're buying compared to all other restaurants. Okay, and a few takeaways here. One is, like we already saw, they buy a large amount of hazy IPAs. So this would definitely be good to ask them what's going on. We notice your sales have been down. This is the #1 beer you buy. You buy it probably more than any other restaurant does. Why is your demand down? Are customers not wanting it anymore? And let's just say that, yeah, they found that they've maybe had this on draft for too long and they need to switch it up. What we'd be able to do is offer them several other beers that we know are selling into the restaurant segment in that local market. So we know pale ales are the second highest selling beer to all other restaurants. This is our flagship pale. We also know our seasonal pales also do really well. And then there's some other styles down here like West Coast IPAs that they're just buying a small percent of, but other restaurants seem to sell a lot of it. So we have some opportunities there to potentially, once we understand why their hazy IPA sales are down, we could help them increase those. Maybe we could do some specials or something to drive some increased business back to that beer. And then if we find, well, that's not really going to be a good option for us, we could try to move them also into buying a larger variety of our beers. So let's say we move them over to buy 10% of our Pale Ale A to help supplement some of those other beers we bought. So if we were able to do that, basically get hazy IPA A back up to the normal level, and then increase some of their purchases with this Pale Ale A that other restaurants buy, we'd be able to add in about $4,000 of additional revenue over what we've been getting from them recently. And with the margins that we sell on these beers for to this customer of about 73%, that would lead to an additional profit of about $3,000. So that would be a good example of starting with our overall sales performance, finding a segment that's not doing well, pinpointing a specific customer, and then finding some individual beers that we'd be able to now go to this customer and use some real data to have a good conversation with them and see how we can help increase their sales in the future. Okay, so that was our demonstration. Just to recap real quick, first opportunity was we found that we were selling too much of a beer to wholesale kegs and not leaving enough for the draft in the tap room. What we're going to do is we're going to shift a lot of that volume and make sure we're saving it for the tap room. That's going to get us quite a bit more margin for each barrel sold. We'll expect about $24,000 additional dollars if we're able to push that one through. Next up, we looked at our beers and we found that double IPAs had our lowest margin. We dove into that a little bit deeper and we found that cans were the furthest under our fleet average with other beers. If we're able to push our double IPA price up to this and get the same margin as all of our other beers, that would be about $2,000 of additional margin opportunity for us. Next up, we started to look at our customers. First, we started with a new customer who's doing really well. They were one of our resorts. So we looked at their volume a little bit more and we looked at other resorts and we were able to identify a few beers that this new customer might be able to sell. And if they were able to do that, they could really take their current momentum and be able to build on it, thus increasing our sales. If we were able to get them to buy some of these other beers that other resorts sell, that'd be about $5,000 of additional margin. And then finally, we found a customer that was kind of struggling. We looked in and tried to identify what beers they're struggling with, and we were able to do that. So if we were able to work with them and increase the sales on that beer, and then potentially get them to buy another beer that other restaurants have been buying in their area, that would lead to about $3,000 more profit. So in those 20 minutes, we were able to identify those 4 opportunities, started at a high level and worked our way down. And in total, those would drive about $35,000 of margin, or about 6.5% increase in this business in about 6 months' time. So I'd like you to think go back through my opening question and think through your business. Do you have an analytics program that would allow you to find these same type of insights in that short amount of time? If so, great job. You've created a good program. I'd probably like to hear more about it. If not, and you can see how some of these opportunities might be good for your business, please reach out to me. You can enter your email further down this page, or you can email me directly. That email is jeremy@centralcoast-analytics.com. Thanks for your time today. Have a great day.